Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience of SmithWeekly, including Sean M., Gordon S., Brian H., and Jackie A. On the program today is a returning guest. Mr. Jordan Trimble is back with us. Jordan is the president and CEO of Skyharbour Resources. The company is focused on exploration and project advancement in Canada's Athabasca Basin through its core projects at Moore Lake and Russell Lake, as well as extensive collection of exploration projects that are being advanced by partner companies throughout various areas of the basin, but primarily on the more infrastructure developed eastern side of the basin. Skyharbour Resources is listed on the Toronto Venture Exchange under the symbol SYH and also on the US OTC markets under the symbol SYHBF. Jordan, great to have you back on the program. Welcome.
Thanks for having me. It's a pleasure to be back on. Looking forward to catching up. A lot going on and a lot to cover off.
Great to chat again. And I think we chatted at the end of 2023. So great to have you back. And we're already well on our way to the halfway point of this year. And so I wanted to start it off here really before we get into Skyharbour. I just wanted to collect your thoughts briefly on the current state of the uranium market, the things you're seeing out there that maybe you want to point out to the audience with respect to maybe sentiment and also market events.
It's been a volatile and exciting start to the year for the uranium price for investors, for the market. We saw in January incredible move higher. Obviously, the uranium price led that, the spot price in particular, which broke through $100 a pound, almost clipped $110 a pound, and then subsequently pulled back, as I think most people were expecting it would, and most industry pundits were predicting. And we saw it find support in the low to mid 80s, and since then it's bounced off that support, trading in the mid to high 80 dollar a pound. That's for the spot price. We've continued to see the long-term price, the contract price, tick up though, and we saw a Trade Tech report last week, $80 a pound for the long-term price. So it's important to again, look at both of those prices. I know the market and market participants typically on a daily basis are just watching the spot price, but as most people know, historically most volumes traded of uranium is through long-term contracts, and so it's always key to weigh both prices, look at both prices, and we've seen that long-term price continue to move higher. There was quite a bit of divergence as we saw in January, and so that's closed, and I think it's a healthy pullback. Now, as far as the equities are concerned, we saw a move higher in January. We obviously saw a pullback subsequent to that as the uranium price pulled back. I think we've seen a bottom put in. It's been a somewhat choppy market, but importantly, the underlying fundamentals are incredibly strong. I continue to repeat myself when I say that I'm as bullish as I've ever been when we look at what's driving this higher uranium price and this rising tide as we work our way through what I think will be a much longer, more sustained bull market, something much more comparable to what we saw in the late 60s and early 70s versus what we saw in the mid 2000s. I do think that this bull market for uranium and uranium mining companies will last much longer, and I think we'll see a new norm, a new price for the commodity. We typically see it overshoot that fair market price, or as we saw in 06, 07, and as we've seen in previous cycles. I think we could see that again. But at $85 to $90 a pound in the spot market and $80 a pound, call it, in the long-term market, we still, I think, have a lot of room to move. As we've talked about previously offline, the historical highs in inflation adjusted terms are close to around $200 a pound in today's prices. So We're still less than halfway there currently. It's tough to obviously predict exactly where it's going to go, but I think the fundamentals are strong enough that we will see this price continue to move higher. You look at the supply demand numbers currently, close to 200 million pounds of annual demand. And that's in the backdrop of about 155 to 160 million pounds of primary mine supply. So this 40 to 50 million pound primary mine supply deficit, which historically has been met with an abundance, or at least in the last 10 to 15 years, an abundance of secondary supply, whether it's, inventories, whether it's, underfeeding, whether it's, previously the downblending of weapons in the megatons to megawatts program. So there's been a lot of secondary supply historically that has plugged that primary mine supply gap that we've seen. Now, the age of this secondary abundance of secondary supply has come to an end, and that's one of the reasons we're seeing this upward pressure on the price, as this pretty meaningful supply deficit is looming and has been created, and I think will continue to grow here in the coming years by some estimates. I mean, we're talking pretty major significant numbers of just over 2 billion pounds of long-term utility contracting needed between now and 2040, and this supply deficit through 2033 of over 400 million pounds. So you've got kind of two forces and factors at play there. You've got this deficit that's continuing to grow. That's putting a strain on the market. That's causing upward price on the uranium price, and you've also got this new contract and long-term procurement cycle that we're coming into. And I think that's also a key feature right now. Is we saw last year just over 160 million pounds of long-term contracting, near or at, depending on how you measure it, the replacement rate, which is a key figure typically associated with price spikes in the uranium market. And so I think we'll see that again this year, where we see contracting volumes ramp up through the year. I think we're now entering a new contracting cycle, which is typically and historically very bullish for the price of the commodity. But the issue right now is where is this new supply going to come online? How quickly can it come online, especially in the West, right? And we've talked about this at length, but the supply demand imbalance in the West versus the East, obviously exacerbated by geopolitical challenges and conflicts globally. And you've got the majority of global supply coming from Kazakhstan, Russia, Uzbekistan, Niger, places that, at least as far as the West is concerned, less favorable geopolitically, and less secure long-term supply sources of nuclear fuel and uranium. And we've seen in the West here, it's not easy producing uranium. It's not easy building uranium mines. It takes time. There's an added extra layer of regulatory issues that you have to work through, and permitting issues that you have to work through. And so the idea that this kind of new wave of a large amount of production, primary mine supply coming online in the near term just simply isn't realistic. And so again, getting back to the supply demand fundamentals on the supply side, we don't have this new large amount of production that can come on quickly. Whether the uranium price is $180 a pound, $100 a pound, $200 a pound, it's not gonna bring these new mines online any quicker for the most part, right? So they still have to go through the long process of permitting and construction and commissioning and financing and so on and so forth. So we're in a position right now, as I said earlier, where I believe this bull market is going to be much longer, a more sustained bull market. And a big part of that has been this supply side, as we've just talked about, where we're simply not producing enough. And there's been supply disruptions. We've seen but just in the last year with Kazatomprom and with Cameco, recent numbers and announcements where they've announced cutbacks and they haven't hit the numbers that they were initially hoping and reporting that they would hit. They had to guide downwards, and Kazakhstan in particular with the sulfuric acid shortage and issues, that could be persistent for the next couple of years here, and that was where a lot of new supply in a lot of forecasts was supposed to come from over the next several years. And so that's just again, it goes to show how difficult it can be to maintain production and ramp up production at existing projects and to bring new projects online. Now, if we look at the demand side, and this is, I think what's really exciting over the next several years is, we've seen a supply side that as we've talked about at length, and there's lots of good coverage and commentary on this, on the supply side being strained. But when you look at the demand side, this is what's really, I think, going to be a big catalyst for the commodity over the coming years. And as I pointed out, there's almost 200 million pounds of annual demand now, and that's growing at a much quicker clip, up to about 3.5% to 4% a year from 2.5% just a few years ago. So we're seeing this acceleration of demand, and that's driven by a number of sources. Obviously the new builds we're seeing, in places like China and India, the Middle East, other parts of the developing world. As we talked about before, China really leading the charge with plans to build, 10 reactors a year. Currently, over the next few decades, 150 new nuclear power plants that they're planning to bring online in the next 15 years. Again, that's more nuclear power generation and capacity coming on in China alone in the next decade and a half that has come on globally in the last 35 years. So, that's been well known, and I think to a certain extent somewhat priced into the market over the last few years. But the big thing right now we're seeing is the extension of existing reactors, especially in the West. And, a big part of this has to do with, decarbonization objectives and, clean energy in the West, in OECD countries where nuclear fleets that, were possibly going to be decommissioned or weren't going to be were going to be put offline are now being their lives are being extended. And I don't think the market was expecting as much in the way of extensions as we've seen just in the last few years. And we have countries in the West as well that are now looking at expanding their nuclear fleets that were not looking to do this even 5 or 6 years ago. So we're seeing a shift in energy policy in a lot of countries globally, and this is very bullish for nuclear as the only source of baseload, emissions-free, affordable, reliable, scalable electricity generation. One of the last points I'd like to touch on too on the demand side is the advent of small modular reactors and some of these new emerging markets and industries, in particular artificial intelligence, that are going to require a lot of electricity and are very energy intensive in a relatively small area. And so data centers that power AI, perfect example of this. And this is, I think, caught the market's attention, certainly has caught the market's attention recently, as we've seen some notable agreements announced in the last 6 to 12 months. Notably, Microsoft signed an agreement with Constellation to power some of their data centers with nuclear power. And more recently, we've seen the purchase of a data center by Amazon that's powered by nuclear energy in Pennsylvania. So we're starting to see this play out and materialize, a new massive potential source of demand for nuclear fuel and for uranium. And the small modular reactors that are being proposed to be rolled out and are being commercialized as we speak are the perfect solution to these very energy intensive data centers. Where are they going to get baseload clean electricity from? Well, you co-locate a small modular reactor with these data centers. That's the perfect answer for that, and can provide 24/7 clean electricity reliably, relatively inexpensively. So, number of factors at play here, but some very, I'd say, exciting new emerging industries that I think will are adding to this global trend of electrification. And again, as nuclear power the sentiment around nuclear power continues to improve, it's all, I think, very bullish for the rollout of additional nuclear capacity globally, and therefore demand for nuclear fuel and uranium.
Jordan, thank you very much for that. I appreciate the overview. For the new audience that are listening in, you just got a good brief on everything that's happening. And I can certainly appreciate the comments about the unresponsiveness of the market. $100 uranium or even $150 uranium doesn't necessarily solve anything when the banks want to see term contracts signed on large development projects that require debt financing. They don't care if it's $150, they want to see the contract book. I think that's important to point out, is just because we have a higher price at this time doesn't mean much is getting solved right away, because all this has to digest and saturate for a period of time. And to see the price go up and then come right back down isn't necessarily going to fix some of the confidence issues that maybe some of these players have, either with respect to what they should be paying or what they should be underwriting at. And so that's another component here that I think has to be solved only with the passage of time and development. Appreciate your comments. And also, mining is quite difficult, and we've seen some folks say that production is underway, but have yet to see the real cake in the can yet. So I think this year will help to be telling with respect to the abilities of some of these second tier, third tier producers. I'd like to get into Skyharbour. Why don't we have you discuss active progress at Russell and Moore Lake projects right now, and then we'll jump into a bunch of other things.
Yeah, absolutely. So, as I think most of the audience knows, we have a very large portfolio of Athabasca Basin high-grade uranium exploration projects scattered right throughout the basin. We're now the third largest mineral tenure holder in the region, with just over 1.4 million acres across those 29 projects. The two main and most advanced stage exploration projects that we're actively advancing and funding exploration at are Russell Lake and Moore projects. And these are two co-flagship advanced stage exploration assets that they're adjacent to each other. So they combine for well over 250,000 acres of ground in really what is prime real estate in the southeastern part of the Athabasca Basin. And by prime real estate, I mean situated between the McArthur River mine to the north, the Key Lake Mill, one of just a few operating active mills in the region, to the southeast, and then our largest shareholder, Denison Mines, a strategic partner of ours, their flagship development project, the Wheeler River project, is adjacent to the west of our Russell Lake project. And so, these two advanced stage exploration assets that we're co-advancing currently with a combined 8,000 meter winter drill program. It's the first time that we're simultaneously advancing two co-flagship projects like this. We've earmarked 5,000 meters of that 8,000 meters to Russell Lake. We're working our way through that program. We're very, very pleased, very excited with what we're seeing thus far. We've basically honed in on three target areas for this 5,000 meter winter program: the M Zone extension, the Grayling East target, and most excitingly for us currently is this new target called the Fork Zone, which is a target that had very little previous exploration carried out on it. And the main reason for that is the conductors that make up this target basically lie right under the road that there's the road that services the McArthur River mine that runs right up through our western claims, which is great, brings our drill cost down and our exploration cost down quite significantly, which we could talk a little bit more about. But there's also power lines that are parallel to the road. And so that has interfered with historically the geophysics, the EM, and the mag that had been carried out at the project. So not a lot of exploration and very little to no drilling at this target area. So our geologists did a fantastic job of modeling the conductor at depth and refining drill targets, which we're now testing, and we're very, very happy with what we're seeing and looking forward to obviously getting final results in, and that'll then determine the summer drill plans at Russell. Currently, we are fully funded and permitted for another minimum of 8 to 10,000 meters of drilling. Again, we'll likely divvy that up between Russell and Moore Lake, and the ratio will be determined by the results from this winter program. Now moving over to Moore Lake, so we have 5,000 meters at Russell, so 3,000 of the 8,000 meters is earmarked for Moore. We're making great progress there. The drilling there's a little bit different in that it's infill and resource expansion drilling at the main high grade Maverick zone. So most of that 3,000 meters is relatively shallow drilling to further delineate the high grade zones at that Maverick corridor. So we are expecting some good numbers from that. We've had previous results from that main Maverick zone, upwards of 21% U3O8 over 1.5 meters. That was within 6 meters of 6%. And again, it's relatively shallow, which is very important at about 260 to 270 meters depth, right at the unconformity. And we are going to wrap up the 3,000 meters. Again, most of that at the main Maverick corridor, which is a 4.7 kilometer long conductive uraniferous corridor that's host to several high-grade zones, the Maverick zones. And we did do a little bit of regional drilling at a few of the other targets at Moore Lake, as again, it's a fairly large property package as well beside Russell Lake. So 8,000 meters that we'll be completing here. Results to follow. Very, very pleased with the progress we're making. Because of the infrastructure at the projects, the road that runs through Russell Lake, the power lines, and the exploration camp that we're staging out of at Russell, it brings our drill costs down quite significantly. We're drilling at an all-in cost currently across both projects between $300 to $350 Canadian. That's all in a meter. So we look at that compared to some other projects, more remote projects in the Athabasca, other companies, exploration companies that are drilling. That's in some cases is 50 to 60% cheaper than your all-in per meter drill costs at other properties in the basin. We can also drill the targets at Russell all year round, as most of them are basically right off of the road. And so it's a great asset, very strategic asset in terms of its location, incredible upside and discovery potential. And I think we're in a great position this year to deliver a new high-grade discovery at the project and to continue expanding the known high-grade mineralization and zones at the Moore Lake, adjacent Moore Lake project. So that's just an update on the programs at our two co-flagship Russell and Moore Lake projects. Lots of news flow to come out on drilling. We are going to, as I mentioned earlier, going to commence a summer program shortly thereafter that will consist of another 8 to 10,000 meters of drilling, a minimum of 8 to 10,000 meters of drilling that we're funded for. So you'll likely see through 2024 our largest single year drill campaign that we've ever carried out as a company, of a minimum of call it 15,000 meters across both projects, likely closer to 18 to 20,000 meters depending on the continued drill costs going forward. So 15 to 20,000 meters of drilling across Russell and Moore in multiple phases right through the year, and lots of news flow and potential catalysts from all of that drilling and all of that work.
Jordan, I'm looking forward to seeing what the results are on these programs. And these two projects were obviously the key projects for the company that they're advancing in-house. And of course, Russell, a strategic deal with Rio Tinto, which I want to come back to in a moment. With that, while we're on the topic of some of these key projects and also moving into the partner piece of this as well, there was recent news that Orano is getting going on some exploration work at the Preston Project. Talk about that, and then also just that importance of the relationship that you've been able to work with Orano.
So the announcement that we had out on Preston, which we're thrilled with, is it's the first official program at the project in a number of years. It's actually the first official joint venture program, exploration program that's been carried out. Is a previous program that Orano carried out there. They were still earning in their 51%. So we formed the JV with them a number of years ago. Unfortunately, it was in and around COVID and a lot of the exploration in certain parts of the basin, we saw a pullback in budget and programs. And this year, we've announced with Orano as the operator, fairly comprehensive field program right through the winter here into the spring, into the summer, consisting of some initial geophysics. So that's ground EM and gravity, which it's a big, the Preston Project's a big project just south of PLS and NextGen as well. So it's in that western part of the Athabasca Basin where we've seen a number of notable recent discoveries. It's also road accessible. The road that serviced the Cluff Lake mine runs right up through the project. And so they're carrying out some geophysics to start here. And then they're going to follow that up with a soil sampling program this summer, an SGH program, which will be a fairly extensive program across a large area. And the total budget for this year's program, various programs, is just under $900,000 Canadian. We're very happy to be participating as a minority joint venture partner in that. And we're excited to see what the results will lead to. It's a project that, given its location, certainly its proximity relative to some other major discoveries on that side of the basin, and some of the previous work and findings, as well as the work that Orano is carrying out this year, I think it's a project that is ripe for discovery, and hopefully we'll see continued work there in the coming years from them.
It's good to see them spend some money here, even if it's maybe a small amount for them. I think it speaks to, one, the relationship, but then also, Jordan, we know Orano's have some troubles outside of Canada. We don't need to go into those details. Anybody can figure that out at this point because it's been widely discussed across the different jurisdictions of the challenges. And I think that Canada is an important asset for Orano, and I think it speaks to the relationship you guys have there as well. And hopefully there's some success that comes out of this initial work that they're spending money on. So I appreciate the comments there. While we are on strategic partners, the company also has a long-standing relationship with Denison, and of course, it's recently demonstrated further relationships with some of these larger groups out there, such as Rio Tinto with the Russell Lake transaction. Talk about Denison, talk about Rio Tinto, and your ability as the leader of Skyharbour to continue to work with these notable partners.
As I mentioned earlier, we've maintained a strategic partnership, a great working relationship with Denison. They're our largest corporate shareholder. The president, CEO Dave Cates, is a director of Skyharbour. He's a very large shareholder personally. So I think it's a big stamp of approval, if you will, from one of the leading developers globally, uranium developers globally. And it shows the the confidence that they have in us and in what we're doing. Russell Lake, just to kind of go back and re-highlight the strategic location. If you look on a map, you'll see the Russell Lake claims essentially encircle Wheeler River to the north, to the east, and a little bit to the south. So it's a very strategic project relative to where Denison's building a uranium mine currently at the Phoenix deposit. So and if you look at the target areas at Russell, a lot of these targets that we're drill testing and that we're focused on are the direct extension or continuation of fertile conductors and uraniferous corridors from Wheeler onto our Russell Lake project. And so they have, needless to say, as a shareholder, and Dave being a director, have a vested interest in what we're doing. But it's also, this important to emphasize the strategic significance of Russell, given its location and kind of given what the exploration and discovery strategy is at the project going forward. Now, as far as Rio is concerned, it was a transformative deal, project property deal for Skyharbour when we announced the option agreement at Russell. I've talked a little bit about why Russell is so important in our portfolio, and it has amazing upside potential. A lot of the historical exploration that was carried out, was decades ago. It was worked by Rio previously, but also by Hathor. And so, one of the exciting things for us is going in there with some new ideas, some new exploration techniques and methodologies, and I think we're on the right path to, finally crack the code, if you will, of the project, and yield, deliver a new high grade discovery at the project. And Rio, if you look at the way we structured the transaction as an earn-in option with Rio, I think it goes to show, Rio obviously views the project as having, still having a lot of upside potential. It's basically structured in such a way where it's an earn-in option over a number of years. There's an initial 51% that we can earn in. In fact, we're pretty much there. We're going to be complete that initial 51% earn-in and majority ownership and operatorship in the project once we finish this winter program. So we'll be complete that, and then we have the option to earn another 19%, so to get us to 70% of the project, and then at that point we can elect to buy Rio out of the remaining 30% for just over 33 million. So, it obviously shows from that standpoint, Rio views, and a big part of that would be in stock. So Rio would become our largest shareholder, likely in that scenario. And so it shows that, Rio sees there being, sees the upside at the project. If we're successful and we make a major new discovery and we end up buying out 100% of the project, Rio is a major shareholder of Skyharbour and benefits with that equity position being worth a lot more in the company. And I think another part of it too, to emphasize is, it took a while to negotiate. It's for us, for an exploration company, it's a flexible earn-in option agreement. So, as I went through the various stages, it gives us the ability to make decisions as to how much we want to earn in, how we want to do that, how much money we want to spend. And so there is flexibility, which is important for us, but there is a pathway to get to 100, right? And I think the other part of it too is, given our work and years that we spent advancing and exploring the adjacent Moore Lake project, which does host some similar geology, and we've had success at that project over the years. I think they recognize that our team, our geological team in particular, was well suited to advance Russell going forward. We know we know the geology in the area well. We had what was our main flagship project at Moore Lake, which we've been advancing for a number of years successfully, and then adjacent on the other side of Russell Lake is our largest corporate shareholder in Denison. And so I think it was, also a function of us being a good fit corporately and with our geological team to advance the project and to unlock value at the project.
The fact that Rio wants to work with you guys, and also the fact that they're willing to take a chunk of stock as part of that potential 100% buyout is also telling as well as to how they see the market, and also the importance of this project to them as well, based on the valuations that you look at this point. So looking forward to seeing some of the progress on some of the work that's being done by you guys on the ground there. One of the other areas, of course, which we have to go into and talk a little bit about, is all of the other partners that are at Skyharbour and various land packages of various projects at different stages. And that includes Skyharbour Resources, Azincourt, Basin, North Shore, Tisdale, and Maduro. Talk about some of the current ongoing work that's happening with some of those partners, and just overall, your guys' work with those partners. And of course, we'll move on to some other stuff here in a moment with respect to potential future opportunities for new partners.
Yeah, sure. So I'll try to speed through this because there is quite a bit of news flow and information from these various partners, in particular in the last few months. But starting on the west side, I talked a little bit about our Preston project and our partnership there with Orano and the work that they're doing this year that we're participating in. So that's the Preston project, and adjacent to that is East Preston, which is being advanced by our joint venture partner Azincourt. They're the operator, majority interest holder in the project. They've announced the commencement of a 1,500-meter drill program. They've done an excellent job over various years advancing this project. More recently, in some drilling that they've carried out over the last few years, they've started to intersect anomalous uranium mineralization, some really interesting alteration, and various zones of notable structural disruption and indicator minerals. Really, all the kind of hallmarks that you want to see of high grade uranium deposition in the Athabasca Basin. So we're excited for them to continue advancing that project. We are also participating as a minority joint venture partner in that program. This year, we're only 10% interest holders, so it's a smaller amount, but we want to obviously have some upside, retain some upside if they're successful in making a new discovery at East Preston. So those are over on the west side. Our joint venture partner, most recent joint venture partner, Valor Resources. We just announced the formation of the joint venture with them at our Hook Lake project. So they've completed the earn-in at that project now, and we are expecting some additional work from them later this year. We'll get the budget, we'll get the plans, and looking forward to that project being advanced. There's a very high grade surface showing upwards of 68% in previous sampling right at surface, and it's a bit of an enigma. The source of that high grade is yet to be discovered. Needless to say, if it is discovered, that'll represent a major discovery in the region. But a very exciting project that we're looking forward to. Valor, having now taken the reins as the operator, looking forward to them continuing to progress and advance that project. And then of the 7 partner companies, those are the 3 JVs. We have our 4 active earn-in option partners. And just as an overview of these 7 partnerships, assuming all of them complete their earnings, 3 of the 7 thus far have, but if the other 4 complete their respective full earnings, that would represent upwards of 80 million dollars Canadian in combined project consideration coming in. So that's just under half of that is in exploration funding from these partner companies, and then the other, call it just over half of that, is cash in stock that would come in. Now it's that's best case scenario. That's assuming that all these companies complete their respective earnings. But again, if we get an incredibly hot uranium market, the prospects of that happening obviously go up. And so of the 4 current earn-in option partners, 2 of them in Tisdale Clean Energy at the South Falcon East project and North Shore at the Falcon project have either recently completed inaugural drill programs or are in the middle of inaugural drill programs. So North Shore just announced and completed a small inaugural program at the Falcon project, having intersected elevated radioactivity, notable alteration, and the assays are pending from that program. So a good start. We're looking forward to more work at that property later this year from North Shore. And then adjacent to them is the South Falcon East project, currently under option to Tisdale. And you and I have talked about this, but this project is a more advanced stage exploration asset, host to the Fraser Lakes Zone B deposit, a relatively shallow inferred resource at the project. So it's a little more advanced stage. There's been more money put into it, and Tisdale has just completed an initial phase of drilling, planning on a second phase to commence here shortly. And they are a couple of things they're looking to do. One, confirm the existing mineralization, which they've done, but I'd say most importantly, looking to expand that resource and the known zones of mineralization. It's open at depth, it's open along strike. There's a number of other highly prospective regional targets as well at the project. So they are planning to drill test some of those targets, and it's a great asset. It's a project, both actually Falcon and South Falcon East. We spent money on before we optioned them out back in 2022 and early 2023, and those are projects that if we were not focused on Russell and more, we would likely be spending our own dollars there to advance, those claims, because there's known mineralization there. There's great discovery and upside potential. It's shallow. It's relatively inexpensive, proximal to regional infrastructure. And we're of the belief there's a lot more that can be found at those projects.
There's a lot of junior partnerships that are happening here, and you highlighted a number of those here. With respect to North Shore and Tisdale have property connected to each other here, and that particular South Falcon project has a bigger earn-in terms of the finances with that earn-in are bigger, I suspect, because of the existing deposit that is there, that is around that 6 to 7 million pound area, if memory serves. How many juniors out there have actually a deposit of that size already that are basically valued as an exploration stage company that don't have anything? Comments there before we move on?
Well, I think to answer your question of how many other companies in the Athabasca Basin, exploration companies, are trading at that kind of evaluation with pounds in the ground, there's zero other companies that exist that have that kind of a at least an earn-in option on a project that is host to a small resource, albeit lower grade, but right at surface and open to expansion. So yeah, getting back to the option agreement with us and Tisdale. I mean, look, we have a very collaborative and good working relationship with the management at Tisdale, with their geological team. We've worked with them for years. We know them well, and the project and the agreement, the option agreement. Yes, it's our largest in terms of dollar value, our largest option agreement. But I think what that just shows you is how valuable we deem the asset to be, right? No different than the option agreement, the earn-in that we have at Russell with Rio. For us to get to 100%, it's a large balloon payment that needs to be made. It shows you that there is a lot of upside potential that the seller, that the optioner sees in the project, right? And so that's exactly the same with us and how we view, South Falcon East, right? It's a project that is quite unique for, an exploration or a smaller cap company to be acquiring in the Athabasca Basin. And I think there's going to be a lot more value unlocked there over the next year or two. And we're thrilled to have Tisdale do that and for us to participate in the upside, ultimately, assuming they earn in as a minority interest holder in the project and as a large shareholder in the company.
Appreciate the additional insights there. And there's not any of that particular stage of the junior stage companies that actually have an existing deposit that's actually defined and on hand. There's a few companies that are working on some of that stuff, but it's not the same class that I would deem some of these early stage juniors in. So quite small for what it has. And so it's an interesting one as well. So I appreciate the insights there, Jordan. With respect to how investors look at Skyharbour today, and I'll come back to another question towards the end here about this as well. I think they have a relationship, but basically how investors view Skyharbour is, for me, I look at companies out there, maybe the underlying commodity, for example, you have options with respect to physical uranium investment exposure. Not my type of investment, but certainly for some people, that's what they prefer because of their own circumstances. And then obviously on the other end of the spectrum, Jordan, you have the small exploration company that might have a single asset. Some of them we've mentioned here, that's completely on the other end of the risk spectrum. and they might have one project and they're a very small company and everything is, live and die by the drill bit essentially, underlying physical all the way to the furthest end of the exploration curve in terms of risk spectrum. And then somewhere in there, you have a mix of development stage companies, production companies that are moving into production or restart tier of companies. You have majors in there as well that fall into that category somewhere there on the spectrum. And then you have companies like Skyharbour and even companies that focus only on royalty and streaming that also fall into that spectrum. And that's closer to the safer side of things, in my opinion, in the sense that you guys aren't just only an exploration company, you've got this prospector generator model that's with that as well. And you've set the company up basically as things progress here to be on a sustainable path via a few different mechanisms. When you talk to the investor about this, how do you characterize this company in terms of the proposition versus someone throwing all their money into a small little junior that's on the exploration side? And as you know, most of these fail. But what are your comments just on that risk profile and then also that upside leverage that the company has set up through its different models?
Yeah, look, it's a loaded question. I'll do my best to answer it succinctly as I can. So, if we just look at the history of Skyharbour, I think that's important. We've been around for 10 years. To build up the project portfolio that we built up with almost 30 projects now. A number of those are earlier stage, more grassroots projects, but we've got I'd say a very nice diverse array of early stage to advanced stage exploration assets. With Moore Lake being the most advanced of the lot. To build up that kind of a project portfolio in the Athabasca Basin, it takes a long time, and/or it's very expensive if you can even get your hands on those projects. So I don't think it's something that can be replicated anymore, especially in this market. And then as you point out, we've got this dual pronged strategy of focused exploration and advancing our core projects at Russell and Moore, and that's very important because we are trying to ultimately make new discoveries and delineate and expand existing resources at the various projects, in particular at Russell and Moore Lake, and then have partners do that at some of the other properties. So we are offering investors that as the one project company, exploration company would, we're offering investors the potential upside of a new high grade discovery in the Athabasca Basin. I'd say, I think we can boast the fact that, because we've been there for a while, we've assembled, I think, one of the best geological uranium exploration teams in Saskatoon. We have a real good understanding of the rocks and specifically the projects that we're working on. I'd say that, our projects that we're actively advancing, in particular Russell and Moore, are discovery ready. I note that it's not drill ready. You hear a lot of projects are drill ready, but they're discovery ready. In particular, that's the objective. Moore Lake already has some high grade uranium mineralization. Really, there we're looking to kind of build that out. But at Russell, it's discovery ready. The next hole could be the big hole. That's important because there is a lot that goes into making these discoveries. It's not just go drill holes and fingers crossed, hope you hit. There's a lot that goes into it. You got to garner and go through a lot of information and really strategize. Otherwise, you're literally just drilling in the dark, right? And Russell Lake is a discovery ready project in our portfolio that we're actively advancing. So we offer that a big potential return on a new discovery, new high grade discovery. But we also have this prospect generator business, which pairs up very nicely with the some of the main catalysts at the two main projects, right? And so the prospect generator business allows us to focus our time, money, and efforts at our core projects. It allows for a lot more news flow from these various partners as we just went through. So, if any one of these partners is successful in making a new discovery or has exploration success, we benefit. Typically, we'll retain a minority interest in the project. We'll have an equity position in the company, and in some cases, we'll also have a royalty an NSR on the project. So we do have a little bit of exposure as well to some royalties on various assets that we have in our portfolio. And it also with the partners allows us to keep our equity dilution down. So we haven't had to raise a hard dollar in a private placement and in a financing since August of 2020. We've had money in we've had cash and stock come in from the partner companies. We've had some warrants exercised as well, but I don't think many other exploration companies can say that they haven't had to do a hard dollar private placement or financing in almost 4 years, right? And again, a part of that is because that we get cash in from these partner companies on an annual basis, and you know we will continue to grow this business. It's important to note we've got 7 partnerships currently. We've got 19, 20 other projects in the project portfolio that we own 100% of that we're actively seeking partners on. And I think especially as the uranium market continues to improve, we'll be successful in bringing in new partner companies. And then, you know, just from I'd say from a valuation standpoint, you know, I like to bring up the fact that yes, we've built up the project portfolio over a decade. We've been opportunistic, especially when the market was challenging. You know, in 2013 to 2016, it was 2016, say to more or less 2019, 2020 was a, you know, it was a bear market. It was a bear uranium market, and we were able to be opportunistic in those years, acquiring projects at very attractive valuations. 4 of the 29 projects that we have in our project portfolio were in a company, J&R Resources, in the mid 2000s, actually run by my geological team then, and they ultimately sold the company to Denison before joining us at Skyharbour when we started Skyharbour. But back in the mid 2000s, J&R had 4 main assets in it. Those 4 main projects in the basin, we have since reacquired and put back into Skyharbour. In 06 and early 07, when the uranium price had its big run up to just under $140 a pound, J&R was trading at almost a $400 million Canadian market cap in 07. So the re-rate potential on these assets is you know quite significant when we look at previous cycles and as we work our way through this bull market. So you know when we look at you know Skyharbour's project portfolio, it's important to look at it as a whole. We have you know various tiers of projects. We have projects that we're actively advancing that can deliver those big high grade discoveries and resource expansion, as well as projects that partners are funding, some earlier stage projects that require more reconnaissance work. And, you know, again, typically those are the projects that we're looking to option or JV out. So it's a very diverse portfolio of projects all throughout the basin. But, you know, as we say, we're building Skyharbour up to be a one-stop shop for high-grade uranium exploration, discovery potential, and resource expansion drilling in the Athabasca Basin across numerous projects with various companies funding those programs.
Jordan, I appreciate that. And I think it highlights a number of things that you guys have been able to do over the years to help demonstrate that value, and then also structure the partners, the junior partners, in such a way that you're able to realize both securities, but also cash payments to help sustain the G&A of this business. And I think that's important for people to understand that part of it as well overall and how you guys have structured this, because to me, it comes into a safer form of a equity investment for us that I think is compelling, and it actually shows that there's upside to push out here as well to the audience to understand that it can fill up a piece of a portfolio that's looking for mix, upside leverage, less risk, and those types of things. And then good point with respect to discovery ready versus drill ready and difference between those terms, Jordan, because obviously, as you and I both know, any cow pasture essentially could be deemed as drill ready depending on what kind of context you're speaking of. Well, we talked about the opportunities as far as Skyharbour has additional projects that are available. You guys are active adding further projects to your guys' portfolio that could be used either in-house or additional projects to be considered for the prospector generator model as well. So I think we covered that one pretty well. One of the last questions here as we wrap up was just your thought on how with Moore and Russell and the potential for success moving forward with one of those projects or both, how do you see this when the day comes that you guys have some additional success with those projects, or maybe there's potential for a serious discovery there on one of those projects where the company value substantially increases? How do you guys look at that in terms of what you would do at that point, Jordan? I know this is very subjective to valuation and all that stuff, but would you guys continue to advance that property in-house? Would you look to move that property off to somebody else or spin that property off where it focuses only on the advancement of that project towards economic studies? Would there be the potential for a buyout entirely of the company at the right price? Or really to you, is all those options on the table at this point?
Good question. I'd say, look, all of those options are on the table. There is the added benefit of this kind of a large portfolio, diverse portfolio, where you do have that optionality value. And we've seen other companies take advantage of that recently. So yeah, I mean, look, we could, on the back of, exploration and discovery success at our main projects, maybe look at a situation where you spin out the a number of the earlier stage projects or some of the prospect generator business into a new co. That is an option. I've said before, we're ultimately working towards a corporate transaction. That is our end goal. We're hopeful that the timing there is as good as it can be, whether it's the uranium market continuing to move higher and the valuations continuing to move higher, and or on the back of, again, exploration and discovery success at the projects. We are looking to transact at some point, and so all of those options are on the table, and we've got a pretty good sense of what we need to do to create value at the project level with the partners, through project acquisitions. But yes, ultimately, we would like to, there's a payday at the end of the day for the shareholders, and we would look to get the best terms that we can on a transaction. Look, I think if you just look at the current landscape in the basin and the companies that are operating there, if you take companies in that 50 to call it $500 million valuation range that are pure play Athabasca Basin, call it advanced stage exploration companies or early stage developers, there's just a few of us left, right? There's us, Canalaska, F3, Atha, but there, and then you're looking at the developers, and below that you're looking at some of the smaller and even micro cap exploration companies. So I think we're well positioned going forward, as one of a few companies in that kind of tier of companies that are, call it advanced stage exploration companies, into early stage development stories. And as the uranium market improves, I think that also incentivizes more M&A and more transactions to take place.
There's going to be a lot of folks knocking on the door as we move on here. It's just a matter of at what point are those discussions to be had, and at what price, of course, as well. So I appreciate the comments there, Jordan. One of the last things here as we wrap up, just wanted to give you an opportunity to talk about maybe some of the work that you're doing at Skyharbour with respect to community development work, education with respect to responsible mining, wisdom transfer, even education, not only at the community level, but even at our governmental level, provincial, federal, et cetera, just with respect to the understanding of the importance of energy and the importance of responsible mining. I think that's an area that also is deficient as we continue down the pathway here in the sector, and also seeing what's happening with our interactions on the regulatory side as well. But then also, just Jordan, for you, it's a little bit unique because you have to juggle various partnerships at the major and junior level at the company, and also be able to work the various communities in which these projects lie. Mention a little bit of comments on this front and how you're able to basically facilitate all of these relationships and keep everything in good standing with all the activities you guys have going.
Yeah, no, absolutely. I mean, look, we've certainly over the last handful of years put a lot more time and resources and capital into that. And we a year ago we announced an exploration agreement with the English River First Nations at Russell and Moore and various other projects located in their ancestral territory. And we've worked closely with local and various stakeholders at the projects, and we were one of the first exploration companies to sign the one of these exploration agreements, and so that was a big milestone for us, and in particular the work that we're doing and carrying out at Russell and Moore Lake, our two main projects. We've engaged with a number of other First Nations in the region, and our various partner companies that are operators at the various other projects have done that as well. And it's important for us to be good stewards at these projects. That's an absolute essential component for what we're doing. Now at the government level, and whether it be permits or advocacy, we are a smaller company, but we try to make our voice heard. I will say at kind of a federal and provincial level, we're seeing we're seeing a number of kind of big major right steps being taken by the various levels of government as as the need for critical metals and minerals, in particular in the West, the necessity for these supply chains and for the mining of these critical minerals, that's becoming ever more important. That's I don't need to reiterate that to the audience. I mean, you can wake up almost on a daily basis and see a news article, whether it's in Canada or the US, talking about just this. So the governments they're obviously now waking up to this, and they're doing what they can to help facilitate that. I mean, a big thing that we've benefited from in recent years is critical metal charity flow-through financings that allow us to raise capital, have allowed us to raise capital when we have raised money at a fairly significant premium to the to the market price. So when we did raise some money through a charity flow through critical metal flow through financing back in December, it was just for strategic institutional investors that came into that on the back end, but we were able to raise it at a well over a 50% premium to where we were trading at in the market. And part of that, the reason for that is the tax incentive created by the government for mineral exploration in Canada, in Saskatchewan, looking for critical metals like uranium. So that's just a kind of a much smaller example of the government really trying to foster and facilitate the development of these projects so that we can create secure supply chains of these critical metals domestically and with allied nations.
Always can appreciate the efforts, even if they're smaller efforts. As you mentioned, because of the size of the company, you can only do so much, but appreciate all the efforts to get home these ideals to the right places, and as well, as you said, secure domestic supply chains properly for independence from outside parties, as you well know is very important today. Well, let's leave it there for now, Jordan. For potential investors who are listening in, the company has a market capitalization of about 88 million Canadian dollars. Why should Skyharbour Resources be considered within the institutional, family office, and retail investor portfolio at this stage?
I think as far as looking at the landscape and the universe of companies in uranium, and then narrowing that down to the top uranium mining district, the best place in the world to be looking for developing and producing uranium, which is northern Saskatchewan, the Athabasca Basin, consistently ranked as a top mining district by the Fraser Institute. So you can check off all of the jurisdiction boxes when you're going through and vetting the investment, and the company. The northern Saskatchewan in the Athabasca Basin is again always in the top 3, top 4 as ranked by the Fraser Institute. Just so happens to be the highest grade depository of uranium in the world. So you're in elephant country. You're looking for these major, large, high-grade deposits that have the potential to return billions of dollars to investors on the back of discoveries. You've seen that with NextGen. You've seen that with ISO, you've seen that with Hathor, you've seen that with Fission, you've seen that with a number of companies over the last 10 to 20 years, and we're looking to emulate that kind of success with the exploration and the work that we're doing at our main projects. But we also have the added component in our business of prospect generation. So we have partner companies providing multiple irons in the fire. Went through the other benefits of the prospect generator business. And like I said before, we're building the company up to be that one-stop shop for investors to get exposure to high-grade discovery potential, exploration, upside potential, resource expansion potential at a variety of projects in our portfolio, and a lot of the funding coming from the partner companies that are advancing these projects, whereby and then we can focus on our two main Russell and Moore Lake projects. So there's not many other companies that I would say offer all of that. It's a multifaceted business and a very dynamic leading exploration company in the Athabasca Basin.
And Jordan, the best way for interested parties to contact the company.
I'd say the best way, you can go to our website at www.skyharbourltd.com. That's an OUR on Sky Harbor. All of our information, all of our contact information is online, so you can get a hold of myself directly through the information on there, or our investor relations manager, Nick Cultura. Always available, happy to chat, happy to discuss with anyone that wants some more information on the company or the uranium market. So please check out the website, and looking forward to touching base.
It was good to catch up again, Jordan. Thanks for taking the time, and we are looking forward to seeing continued progress at Skyharbour.
Thank you very much.